The goal of today's video is to get you started on investing, giving you the basics of things, what to do, what not to do, and where to put your money so that you can retire. Okay, everybody knows what the stock market is. If you don't, please go Google it. A stock, also known as a share or an equity, is a type of security that allows you to own a small portion of the issuing company. So you buy one stock of Nike, you own a very small percentage of Nike. There are also bonds, equities, and commodities. Commodities are like gold, oil, grain, meat. I'm not going to get into bonds and commodities and equities because it's way too in-depth for like the beginner investor. There are also things called index funds. Now, index funds are a group of stocks. You've heard the phrase hedge fund manager. So a hedge fund is a company or person that invests many different people's money into one group of investments. Like they have their own portfolio that they have, certain shares of equities, bonds, REITs, everything. And so they take all of that cumulative money and they distribute it accordingly. And it's basically an investment portfolio for a bunch of people. So people with tons and tons of money throw their money at these companies and they're like, invest it how you see fit. Most big hedge funds are closed. Like they don't allow any more people in it. So the secondary option for normal people like you and me are index funds. One of the best index funds that I could recommend is the Vanguard fund. It basically is a mimic of the S&P 500 just for way less. And there are some apps where you can actually buy partial shares, but I will get into that later in the video. So you're wondering how I can start. What you need to do is download an investment app. I know you've been seeing them everywhere. There's Acorns, RobinHood, Wellbase, Betterment, Stockpile, Webull. There's so many of them, it'll make your head spin. And there's even the traditional ones like TD Ameritrade. That's what I used for a very long time. So my suggestion is to start with either the Robinhood app or Webull. When you sign up for Robinhood, you actually don't need to fund your account right away. It gives you a chance to browse through and see how the whole application works. You don't have to fund it, you just get access to the markets. And you can invest as little as $10 to start. So if you're kind of on the fence about it, $10 is absolutely nothing. That's 2 Starbucks coffees. Plus, when you sign up for the app, they have these 3 icons. They're like golden tickets, and you get to pick one. And then it flips over and it's like a scratch card. You scratch it off and it gives you one stock of a random company. And so when I signed up, I got the stock Sprint. So I got a free $4.22 at the time of downloading the app. On Webull, on the other hand, you actually get 2 free stocks, but you have to do an initial investment of $100, which most people have $100 sitting in their bank account that they could just invest. Okay, so step number 1 is going to be to pick a bunch of companies that you like, either clothes that you wear. If you're, rocking Adidas or Nikes, look into Adidas, look into Nikes. You're on Facebook, obviously, you're on YouTube. Look up these companies. Go, to Google, type in Facebook for investors, and it will give you all of their information year after year, their profit and loss statements. All of this is public information. Basically, you're going to do research on these companies. Now, I would only suggest doing these big companies because unless the world burns, Amazon, Google, Facebook, Netflix, Coca-Cola, all of these companies are going to be going forever. Trust me, your money's safe if you invest in those companies. The second thing you need to do is never, ever try to get rich quick on the stock market. You want to buy penny stocks that are going to go up 7,000% in the next 6 months. It's literally a fool's errand, and that's how millions of people make millions of dollars. And those millions of dollars come from dumb people. So if it sounds too good to be true, it definitely is. Seriously, just don't invest in companies that you haven't done the research on. If they're not an established company with good profit and loss, don't bother. You can also research these companies on websites like investing.com. I'll link it down below. Now, what I want you to do is not invest your money right away because you want to get a feel for the market. So you're going to pick these companies that you've researched and you're going to save their stock symbols into your app. Now what you're going to do is take like a pen and paper or your notepad or something. There's actually free programs online where you can do this. Imagine that you had $10,000 and you're going to use this imaginary $10,000 to buy a bunch of shares of a bunch of stocks. And then you're going to sit and you're going to watch and see if what you know and where you put your money was right and it makes you grow money. Because if you take that imaginary $10,000 and after 3 months it's $10,800, then you know you've done good. This is called ghost trading. During that time, I want you to save as much money as you possibly can. Maybe, an extra $50 a week or $100 a week. Put that money away while you're ghost trading. And then once you're done ghost trading, if you've done absolutely horrendously, you need to hit the drawing board again and relearn what you just learned because you did it improperly. But if you made a little bit of money and your investments went really well, take that money that you saved during that 6 months or 3 months, and then take that money that you saved over that 6 months and invest it in your Robinhood app so that it's ready for trading. Then just buy partial shares of these companies that you've already researched, that you've already ghost traded on, and slowly start investing more and more money. Over time, each month, put a little bit of money away from your paychecks, then take that money, deposit into your Robinhood account, and then just slowly build up a portfolio. This is basically dipping your toes in the water to see if you're comfortable with it. And then once you get smarter and better and you keep doing this every day, then you can invest more money in, Facebook and less money in Netflix, depending on what you're seeing in the markets. The goal of this is to get you investing, because if your money is just sitting in your bank account, it's not doing anything for you. If it is in an investment portfolio and it's well balanced, then over the course of your life, I don't want you to day trade, because day trading is extremely, extremely risky. It is for people that sit and crunch analytics all day. These people sit and they study every single paper, every document that comes out of these companies' financial records, and they know when good things are going to happen. They know when bad things are going to happen, and they basically try to predict the market by buying in the morning, selling in the evening, just trading and trading and trading. But the commissions add up, everything adds up, and it's very hard, and you have to be very, very smart to make a good profit at day trading. And it requires a lot of time. Like, you can't have a full-time job and day trade, because your job is actually during the hours that the market is open. So when you're starting out, really, honestly, truly stay away from day trading. It's extremely dangerous. You can lose your money really, really fast. But like I said, the goal of this is to start investing, dipping your toes in the water, putting a little bit of money in, $200 here, $300 there. It'll start to grow over time. And then with the whole concept of compounding interest, I don't know if you know how this works, but it's not linear growth. It's a little bit, a little bit, a little bit, and then it multiplies. And then once you get past this threshold, it skyrockets. Like, if you invested $2,000 every single month until you were 65, you would have okay, I'm literally going to do this math right in front of you right now. So say you start with $500, and then each month you put in, I don't know, let's say another $500. Like, you have a really low paying job, all you can save is $500 a month. So in 1 year, you're going to deposit $6,000 into your investment account. Ready? $6,000. And say you're, I don't know, 25 to 30 years old. So let's split the difference. It's 27. You want to retire when you're 65. That's 43 years of investing. So 43 years and an interest rate, like, if you do it well, you can easily get in the 8 to 10% range, because that's how the market has consistently grown since the existence of the market. So let's just say 8%. Okay, guys, this number is going to blow your mind. So say you took that $6,000 that you invested every single year for 43 years and you put it in your bank. 43 years times 6,000 is $258,000. If you invested this money and had compounded interest over those 43 years, you would have a total of $2,149,381. Do you see where I'm going with compound interest? Would you rather have $250,000 saved up because you put it in the bank? Or would you rather have 2.1 million because you invested it? Seriously, guys, go to this website, moneychimp.com. I will link it down below. They have a free calculator where you can calculate your current age, what year you want to retire, how much do you want to put in annually, what percent you can possibly gain, and it'll give you the compound interest number by the time you retire. It is the most fascinating, fun tool to play with to see how much money you can have when you're old and tired. Now, If all of these terms scare you, like stocks, commodities, bonds, equities, REITs, all of these things, the terminology base is absolutely humongous. There's so many different aspects that you can study, and literally it's a full-time job if you want to get really, really good at investing. But there are people that are already very, very good at investing. They've created these stock portfolios called index funds. Now, index funds are a collection of all these different stocks, just like these big hedge funds, except they're miniature, the index funds that I referenced earlier in this video. One of the best index funds that you could possibly get, that I've done a lot of research on, is the Vanguard fund. The Vanguard fund almost exactly mimics the S&P 500. And if you look at the beginning of time and the S&P 500, it's always gone up. All these little dips are, the oopsies in our culture, like the Great Depression, the oil crises in the 70s and 80s, the big recession that we just had. All of these dips happen, but over time, if you invested here and here, like, you have made money over time and you didn't sweat the small stuff. You know that it happens every decade or so that we have a dip in the market. So if you take an index fund and they actually have stock symbols, I'll link that down below also for the Vanguard fund. If you just put in, that $500 into the Vanguard fund, and then every month, another $500, another $500, another $500, even when it's down, that's actually the best time to buy, because you've been buying shares all the way up. And then when it goes down, you may lose the value of what you've already put in, but you have to realize that stock price is now on sale. So you should actually double down and buy more at this point, because it will go back up. Then that investment gets to grow, and all this other money that you've already invested over time, it gets diluted a little bit. So you basically paid less over this time, and everything ends up going in the upwards direction over the course of your life. So if you don't want to invest and you don't want to take the time to really research these companies and get to know the profit and loss statements and what dividends they pay and what their strategies are in the future to see how the market's going to treat that, literally just take your money and put it into an index fund. It's blind investing that you know for sure, because these really, really smart people that have trillions of dollars created this for you to invest in. They take that money and they use that to build their portfolio. So all these little, pennies and nickels and dimes for them get put into their account, and they have more money to play with. Causes more growth, guys. It's what I do. I don't like investing in individual stocks. I'd rather invest in this one company, the Vanguard Index, and it's been making my money grow. Over the last year, actually, I've been investing for 3 years now. Passively, not just putting in money into it, I've made about $2,000 without even working. And because I haven't been that consistent with saving and putting in, I know how strong compound interest is, but I also know if, I get a flat tire, I got to buy a new tire, or, if my wife wants a new car, I got to buy a car. So I'm very bad at saving. I'm really good at spending, but I will get better at it. The more consistent my income becomes, the more I can dedicate to putting money aside, having money for myself when I retire, and then whatever I don't need, I can put into another account for my daughter to have when she's older. That way, everybody in my family is safe and secure, and it's my responsibility to provide for them. Just to recap, number 1, do not day trade. It is dangerous. You don't need to know all the terminology. Just look into stocks. Look into companies that you trust, that you wear, that you consume. Facebook, Amazon, Google. Those are the big ones. Look into the Vanguard Index Fund. Download the RobinHood app or whatever app you want to use. I don't care. I've got links down below to any of them. I suggest RobinHood because it's stupid simple. You could be really dumb and you can figure out how to use this app. Do some ghost trading to see how you do in the market without actually risking your actual money. Save money over time and invest it slowly. It's not take $10,000 and invest it and you'll be rich. $50, $100, $200. Save your money, put it into something that gains you interest, not in your bank. In your bank, it's just going to sit there and you're going to be depressed knowing you could have made 2.1 million, but instead you have 250,000. I hope you guys got some value out of this video. Please hit the thumbs up button. It seriously helps the channel. Subscribe for more videos like this, and I will see you in the next one.